Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading, and happy to be here. Happy Tuesday. This is December the 19th, and I am in the Essentials room at Simpler Trading, and I am also dual broadcasting in the Bias room, and I am triple broadcasting, I guess. This is on YouTube right now, actually live on YouTube. So, welcome everyone. Hope everybody is having a great day. Hope everybody's had a fantastic year. We're going to talk about best trades of the year and trading in general, but I do want to highlight some trades that we have had. So let me do a quick sound check. Mirza, thank you. I appreciate it. Good to go. Good to go. Lorna, good to see you as well as always. In the bias room, Andrew, Mike, Baby Bear, Mirza. Okay, good. We're good to go there. And then on YouTube, I'm assuming I'm good to go there as well. All right. So again, welcome. As we wind down to the end of the year, this is December the 19th. Let me get my Camtasia going. Of course, we've got less than 2 weeks to go, and I'm just going to record this, but um, it has been an insane year. I mean, 19th, of course, last day here. Next Friday, I've got trade set up for this Friday and next Friday. We'll talk about that in a second. But overall, this year has just been nuts. I mean, it's really, really um, one for the books. If you don't know, I have been trading. I always forget. I think I've been trading 34 years now. Um, this is probably, well, since COVID, everything kind of got bonkers. But this year, if you look at this, um, and I was trying to do the math in my head, 34, 35 years I've been trading, a long, long, long time. And a lot of those years were trend, trend type, momentum type markets. It was great and all that kind of stuff. This is the ES for this year, and it looks pretty, if you look back and you go, oh man, this is easy. You just buy the dip, everything's great. It was not so easy if you drill down and look at some of these areas here. Um, it's been pretty bizarro world here. Let me just go back 5 years here and I'll show you. So I can't believe it was that long ago, but that was COVID. When COVID happened right there and the world was shutting down and we free fall, we did a free fall straight down. And look at that, straight up, straight up, straight up. And this was just buy the dip, buy the dip, buy the dip, buy the dip. This was the best year that I have had in bias. For you guys that don't know, I run a portfolio called Bias, which is Bruce's income accumulation service. And I started in 2013, and we have had 10 years in a row now. I've never had a down year. Had a lot of, losing trades, of course, had a lot of great winning trades, but I've never lost money in the last 10 years on a yearly basis in bias. But this was the best year that we had. This was a good year. This actually was okay. But when you get into this kind of stuff, you get into the Charlie Brown kicking the football kind of, there's no trend or pattern. It just all over the place, right? That's not what you want. This is what you want. And even coming into this, it's pretty sane and normal, right? And the reason I point that out is to kind of show you where we have come from and where I think we're going. So that's the all-time high right there. And we just took that out in the ES. And we are just on fire right now. And it's because of the Fed has said at the last, Fed meeting that they're going to cut rates, or that not that they're going to cut rates, but their target rate is lower, which implies that they will cut rates up to 75 basis points, which in practical terms means probably 3 rate cuts, maybe starting as soon as March, maybe. We'll see. But that being the case, the market has just been on fire here off this low, straight up, straight up, straight up with kind of no look back. Um, we have been targeting in the bias account. I always like to do end of the year trades. And we initially started back over here I thought we would bounce off these levels and we would come back up and we would get to like 4,800 maybe. Then we took that out and I was like, well, we're probably gonna be lucky to get to 4,600. Guess what? Blew that out of the water. So we put a trade on at 4,600, got a trade on at 4,700, got a trade on at 4,800. Now I'm looking at this going, are we gonna be at 4,900? And I don't know. We don't have much time left in the year. Um, that is the end of the year, so we've only got a couple more, week and a half left. But um, there's no reason to think this thing won't keep going, honestly. So as we look back here now, I'm looking at the ES, and I primarily trade the ES and the SPX and the indexes, the NDX, the QQQ, and SPX, SPY, RUT, IWM. That those are the main ones that I trade. Look at this RUT, crazy, 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 straight up. NDX or the Qs are going to be the same thing. All-time new high here. Again, there's no reason to think that we're not going to keep going into the end of the year. I don't believe. But just so I mainly trade the S&P, the SPX mainly, and that's in the bias room. We do a lot of calendars and diagonals and things like that. I still do credit spreads and iron condors and lots of butterflies and things, but I'm mainly focusing on the S&P. Now that being said, the biggest trades I've had this year, dollar wise, have been individual stocks. I want to highlight some of the trades because it's been, again, we've been kind of all over the map as far as what's going on with the market. But if you can figure out the trend in the market, it makes it a lot easier when you're trying to trade, the the ones we like to trade, the Amazon. Look at that, check that out, looks great. Apple, the Magnificent Seven, Netflix. I've traded Netflix actually quite a lot, and a lot of that is honestly through credit spreads, and it's worked pretty well. Google's, etc. Then you kind of get off into the deeper stuff like, I'm just picking names: Home Depot, Costco, whatever, and look for honey badgers, etc. But for me, much more often than not, I'm trading the S&P, and I do that since now we have the zero DTE expirations, and you can trade those things, and we call them lotto tickets and that kind of thing. So let me show you some examples, and I will show you some of the things we've done this year. These are, I'm trying to go from the kind of the earliest expiration and kind of move forward. Give me a second. I've got a bunch of them over here. We'll go through real quick. This is, I'll start, and again, this is it. It looks like I'm cherry picking. I actually am. These are some of the best trades of the year. I don't really have any account blow up, crash and burn. I've got a couple trades that didn't work out, but we've had a lot of these kind of trades. Now this was an end of the day trade that we did here. Let's see. This one was on February the 8th. Right there, February the 8th. This was the end of the day trade. And I actually didn't take this trade. This was an iron fly that I set up. I like, because of the volatility in the market and all that kind of stuff, I really like selling premium around these iron flies for the end of the day kind of stuff. Now, this is one that I set up in the main room. I didn't take it. There was a lot of these that we tried to do. And the way we do this is go in and look on the trade tab and look at volume and kind of figure out from the charts where's our resistance, where's our support, and where's our expected move, and kind of get us situated like that in order to catch all this data. Now this is the end of the day. That was on February the 8th. 3,800 bucks. That's a pretty nice trade. Again, I didn't actually take that trade. but we set that trade up. I'm just looking from the kind of the early trades on up to kind of bring us up to where we are now. Now I did do this one. This was on Lockheed Martin. This was February the 8th. I tried to find some in January, and if I look long enough, I'm sure I could find some. But I try to do screenshots when we have trades that work pretty well. This, and I want to show you guys also some different varieties of trades. This is basically, this is called a Batman trade. Basically, it is a butterfly this way and a butterfly this way kind of overlap, and they're broken wings, so you don't have any risk in the center. This is a cool way to do it because you can essentially double your width, up or down if you're not sure. This was on Lockheed Martin. We did 3 contracts. Um, Ended up being, again, this is kind of small. I did 3 contracts on the call side. And then I started with this one. It kept going higher and higher and higher. And we added, so I did this one first and did this one second. Added that one on for a credit, and ended up, again, not a huge trade, but ended up being, $500 win with a whole lot of wiggle room and all that kind of stuff. And, when the market is going bonkers and we're not sure which way it's going to go and all that kind of stuff, the smart thing to do is to not size, extremely large. We're just trying to find something that we can make a little money on without having a lot of risk. So I really try to always watch the risk on this thing. So um, the next one I have here that I want to show you guys is in March, and this is pretty typical. We did this in the main room. Again, this is not an iron fly, but an iron condor. Very kind of textbook typical. We sold this one for $1. 10 contracts. We took it off before the end of the day. So we put this on at 1:30, and we took it off at 3:30 for $775. Pretty good. And it's dead centered. We're right there in the center. T+1 lines like that. Beautiful, easy, easy, easy. When the market's not doing anything, we're chopping, we're chopping, we're chopping, we're chopping, and we're range bound. We're just kind of chopping back and forth. Beautiful, easy. We love these kind of trades, right? This actually happens a lot. It's just you don't want to get in a trade like this where you have a runner that goes like that, or like that. This is, again, very quiet day, and that's what you want on a trade like that. So that gets up to March. The next one, I didn't see one in April, but this is in May the 18th. We did this one in the room. Now this one is almost a pin. We did look how low the numbers are. This is a 4,200 pin, only 6 contracts. So it is broken wing. So it does take a little margin, but it's not a huge trade. We had tiny, tiny, tiny risk on this lower end as we were coming up into the body of the trade, right? May 18th, this is closing bell. I'm on the East Coast, so that's 4 o'clock is closing bell. That's $4,800 on 6 contracts. Pretty good. So we bought it for 40 cents because we did a broken wing. Gets cheap. You have risk up here and tiny, tiny risk on the lower end. Excuse me. So you go into the trade at 40 cents, and it was worth $8.50 at the end of the day. Not a bad deal on a trade, right? And you don't have to hit these very often. One every now and then can make a pretty big difference, right? Sorry, guys, I had to cough. Didn't want to cough in your ear. So again, this is S&P, and let me see what else I've got. I want to show you guys a couple of variety of different ones. Hold on. Excuse me. Hold on. I've got a whole lot of trades here. I was trying to figure out, which ones to even show. Yeah, that we did look at that one, and I want to talk about some things that are not S&P. But give me a second here. February. Okay, this one, this is another different. Again, I'm trying to show some different examples of different things we do in the room. This one was a combination of, it was an iron condor, but I legged out. I was put call, sold the puts, and then excuse me, bought the puts back, sold them at 45, bought them back, resold them at 50, and ended up making 600 bucks on this trade. And, the point of that is if you put an iron condor and your call side's here and your put side's here, you start going through it, you close this and you resell it here. And then he comes, look at this day. I mean, it's crazy, crazy stuff to try to trade in this mess. Look at that. Straight down, straight up. And we still made money. We made 600 bucks on this trade. That was back in February. But, the point is, um, in this market, we're trying to be as nimble as we can possibly be. Now, let me show you a more current trade. I did this trade last week, and this one I wish we would have held it. I started really small, 2 contracts here. We bought it a buck 80, and the T plus 1 line was like that. And we immediately, the next day, I believe it was, we put it on Monday, took this one off on Wednesday. 2 contracts, we took off one, buck 80, took that off at 290. And then on Friday, this thing was worth 605. It was 570 bucks. If we would not have taken that one off, it would have been basically double that. So a good trade. Again, we did this in the main room. That was last week, 12/15. Pretty good trade. And let me show you guys this one real quick. So I've got a bunch of main room trades, but I've also got a bunch of bias trades here. We did this one in the bias room. Sorry, not that one. This one was one that we did in the bias room. Now this was a little different. We did a diagonal, and check this out. That's awesome, right? Well, guess what? We did not. We closed this. This was on Friday, right? We closed it on Thursday. We were still right here, dead still in the center of the trade. Once you get to the short strike, you got to be careful, right? The T plus 1 line goes like this. So if you go higher, you lose money. If you go lower, you lose money. We were up 625 bucks, and I'm trying to manage the risk, right? And we only did 5 contracts on here, and we took the win. And then I said, I was looking at this going, the only way this trade wins is if the S&P doesn't do anything. And guess what? The next day we just sideways, sideways, completely dead sideways. I'll show you. It's kind of funny. Right here. So we took the trade off. We had been rocket ship straight up, straight up, straight up. We took the trade off here. And then the next day, which was Friday, complete dead calm, nothing. And that was at 47.20. And that's where the center strike on that trade was 47.20. Kind of crazy how that stuff works, but that's how it works. Just kind of see there, 47.20. Crazy, crazy stuff. So that gives you an idea. I trade the S&P a lot. I have a ton of other examples on the Qs and the RUT and IWM and all that kind of stuff. Again, I'm not trying to, I'm trying to look for the best ones of the year to show examples of, what I do in the main room and what we do in bias. I don't really have any horror story trades. I did want to show you the best trade of the year, and I didn't take a screenshot of it. And this is going to sound way out of the realm. But the biggest dollar amount trade was on JP Morgan. And I told people in bias, I told everybody in bias that I was doing this. And now I manage quite a few different accounts. I trade a large account, and I bought JP Morgan. This was, they asked me what's your best trade of the year? My best dollar trade of the year, I bought JP Morgan at 145.76 when it broke out there. And I sold it at 160 right there. 160.72. Now again, this is, we've been looking at those trades that are, I'm careful with risk and all that kind of stuff. This was a large trade. I bought about 4,852 shares of JP Morgan. It was a pretty large trade. And it's up 107,000 now. I closed it at 160 and I made 72,000 bucks on it. It was in a big account I've got, and it's a portfolio margin, all that kind of stuff. Whole different thing than what we're talking about here. But I do this stuff a fair amount, actually. I bought, and you guys, I'm dual broadcasting the bias room. Remember, I told you that I bought Walgreens, which was as a dud stock, actually. I bought 10,000 shares at 22.11, and I sold them. Actually, I don't have it here, but I don't think no. I sold them for like 23.50 or so. I made $22,000 profit or something on it. It was pretty good. And what else did I buy? The JP Morgan was by far the best. I made, 72,000 on that one. Made 22,000 on that one. I bought some Cisco. I bought 12,000 shares of Cisco, and I flipped it out. I bought it at 53, and I flipped it out at like 54 or something. I just caught the dividend on that one and flipped it out, and I'm so glad I didn't hold it because it's down. I sold that one, and what was the last one? I'm blanking out. Man, I am really blanking out. I'm not sure what it was. But it was I made, it was 10 or 20,000 bucks or something like that. The biggest one by far was the JP Morgan. And if I would have known that it would keep going, obviously I left 8 points on the table here with 4,800 shares. That was been pretty monster. But I caught the move. It's very hard to catch it down here at the bottom. It's very hard. Is this the top? I don't know. Does it keep going? I don't know. But I caught the middle, and that's kind of the goal. So when I'm doing the stock trades, that's totally, totally different because guess what? If I buy JP Morgan and it goes down, I'm catching a dividend, and I was intending to scalp that. And it kept running. So I kept looking at the charts and I kept letting it run and letting it run and letting it run. And it just kept working and kept working and kept working. So, so I kept it. And if you guys remember, you guys in the, I'm dual broadcasting the bias room. If you guys remember I bought 4 stocks and I told you guys that I was buying them. I cannot remember the last one. I don't remember what it was. Anyway, it was a Dow stock. I've been buying the Dow stocks, trying to catch the dividends. If you are not, let's look at the diamonds. Insane move. So I like to buy the dividend stocks, catch the dividend. Sometimes I'll sell naked puts and buy the stock. Or I'll just buy the stock and I'll write covered calls, that kind of thing. I wrote a book on it. It's on Amazon. It's called Wagon Wheel Income Strategy. And that's what this, what that, that's what that JP Morgan trade started out to be. You buy the stock before the X date and you try to catch the dividend and all that kind of stuff, right? That's what that started out to be, and I just kept it. Anyway, yeah, thank you. It was Verizon. Yes. Check this out, Verizon. Thanks, Tom. I could not remember. So and again, I posted this in the bias room. So we bought Verizon ahead of that dividend right there, and I think we bought it at 30. Well, let me see. I can tell you exactly what it was. Thanks, Tom. I appreciate it. I was blanking out there. Oops. Because I saved it on here. So I bought 15,000 shares of Verizon. I do remember that now. Oh man, I'm sick. I sold it for like 2 points. It was like 30,000 bucks. I left that's a lot of money I left on the table. But it's okay. Whenever you're looking at a stock like this, go here. You can tell there's your X date, there's your dividend. So this thing is yielding 7% right now. At the time that I bought it, it was yielding like 8.5 or 9. It was a crazy, crazy dividend. As long as you own it before that X date, you catch that dividend, which is 66 cents, right? Um, so I bought Verizon. I literally, I think I bought it, I bought it here. Um, what was that price? 30. I don't remember taking any heat on that one actually. 32. No, I bought it before the dividend. So I guess I did take that heat and ended up selling it. Maybe that's where I sold it. Anyway, I missed, I caught that and I missed that. So, you know, it's not perfect, but that's the strategy I've been following for a long, long time. And that again, I got multiple accounts, but two different schools of thought. One school of thought is to buy the dividend stock, slow and steady, boring stuff, right? Right, covered calls. That stuff's boring. You see, I can make a lot of money. I think I've totaled it up, and it's over 150 grand, which is pretty nice. And then on the S&P, I'm trying to hit like little singles and doubles, and I do more size on the S&P as well. Um, Let me show you what I've got right now. I put the latest trades, and I'll wind it up here. Um, I put this trade on Friday, and I bought, and then not a big size. I should have done more, but this is for this Friday. I did a 4,800 butterfly, and then I sold a put credit spread to cover the cost of it. Right. Well, that trade right now, I ended up closing these for 15 cents, and that trade is up about, I think it's 3,500 bucks or something like that. I'm not going to close it because I think we'll be at 4,800 this Friday, and that's worth 20,000 bucks. And I did one for next week. I bought 30 contracts here. They were 60 cents. I bought 30 contracts here for 4,900 for the end of the year, last day of the year, 29 December. And we're right now, where are we? 47.70. Let me look. 47.62. So 47.62 right here. And that trade's worth, I don't know, 3,500 bucks or something like that. But I think we've got a really good shot at getting at 4,900. I had been thinking that, all that being said, and I got to wind it up here and get out of the way. I've been thinking we're going to pull back here and we'd have a chance to reload and add more contracts and get ready for higher prices, like that stuff. But so far, we are just not pulling back. So I don't want to short this thing. I don't want to go on the other side of this thing. I'm going to get, if I am, I do think I am planning on buying if we pull back. I do think we pull back here. I just don't know if we pull back for the end of the year or not. It's looking kind of, I was pretty convinced we were going to, but now I'm not so sure. So, I know I talked a lot. Hannah says, what's the most successful and profitable strategy? Probably honestly, if you look at all the strategies, the most successful one over time has been probably calendars. So calendars, diagonals, working great. The biggest dollar amounts, of course, are different depending on what I'm doing. It costs a lot of money to put, to buy all the, shares of stock and that kind of stuff. But the most versatile trade probably is a butterfly. So it's really, really hard to see, or hard to say one is better than the other, because I'm basing on the situation at that time. What's the expected move? What's volatility doing? All that kind of stuff. So it's really, really kind of hard to say. Check out this volatility. We're way down here in the basement on volatility right now. So Um, it's good to be buying volatility versus selling it for the most part. So, all right. Uh, let me wind it up here. I'm out of time, guys. I apologize. I wanted to cover as much as I could and just show you guys kind of some of the stuff that I've done throughout the year, and show you a variety of different type trades, because again, it depends on what the market's doing, what the volatility is doing, what the time frame that you're looking at. Um, there's a lot of variables. I always call it the Rubik's Cube, because you're always looking at variables and you change one variable and it changes all the others. So with that said, let me wind it up here. If I can help you, let me know. I'm in the bias room every day. I'm in the main room 3 times a week at Simpler Trading. So come and see me. And I do think, one last thing, next year, I think with the Fed cutting rates, if they do, and I think they will, we'll get more into a trend market and we'll make a lot more money next year. It won't be as crazy as this year. It'll be easier to make money. I um, am going out a limb and saying next year is going to be a good year to make money. So hopefully that helps. And let me wind it up here, and I will see you guys in the rooms. Let me know if I can help. So thanks for the time. I appreciate it. I'll talk to you guys soon. Take care.